Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkatesh and with me Anuj Singhal. We should be joined by Sonia in just a bit. I'm dressed in the wrong color. I can get that feel from the Asian markets. The global bulls are clearly tired. For the last 2-3 days, we have had 1% and 2% rallies across most developed and Asian markets. And it's quite clear that at the moment, after a weak move of 0.2% in the Dow Jones and other indices in the red, the Asian markets are clearly taking the cue that the bulls need to pause a bit. The proximate cause, and you look for a reason after the markets fall, the reason could be that the Chinese data, industrial output data for November has come in at 5.4 against expectations of 5.9, but chances are the markets would have fallen even without that data. Now, in India, the position has been similar. We've had a lot of negatives being thrown at the market, but with this global tailwind of a bull rally, we've had our own bulls in action. Yes, I also forgot to say that China has arrested two Canadian officials in a tit for tat. And that also could be one reason preying on global bulls. But yeah, in India, we've had this big run in banks and NBFCs on what I would say is a fig leaf of an excuse. The PCA norms are, even if you remove the norms, it's not as if all these banks are going to run out and make a lot of profit. Ultimately, what does an investor want? He wants earnings. Whether you're able to lend one more loan or two more loans is not an EPS accretive argument in the first place. So, they were running because there was a bullish tailwind. But today is the RBI board meeting. Chances are, they've run enough. They can't run any further. What do you think?
Yeah, I think that today is a good day to take money off in PSU banks for sure. And if you're chasing PSU banks today, the trade may work, but that's not
for the day.
Yeah, that's not called a good risk-reward trade. You don't want to be the last person. And look at Bank of India; it's already rallied quite a bit. Oriental Bank of Commerce, we've been pointing that out. And you're looking at 1 month, but from the recent low, the move is even sharper. I think Bank of India was 77 just about 3 days back. Now it's moved to near 86, 87, I think. Similar with the Oriental Bank of Commerce. So take that point. I think for the market, what's clearly interesting is that it's going to give you a dip in the morning. The SGX Nifty is indicating a gap down. And I tell you something, for all the rally, of course, we've had a rally and big rally and we caught that. But despite that rally, we have underperformed the emerging market index, which is something, people should keep in mind. Anyway, normally what happens is that in a strong uptrend, we are in a strong uptrend, the first dip gets bought. So that may happen today. But this market in the near term is overbought. And near targets. In fact, the Bank Nifty hit absolute on-dot target that we, referred to yesterday. There was a lot of FI buying yesterday in cash market, in index futures.
675 crores.
Yes, and I think more than 2,000 crores or thereabout in index futures. And I could see a lot of longs being added. That's not a good sign for the market because, longs would be skittish after the kind of...
They have to unwind at
exactly, so that they may unwind. Now, how does risk reward pan out from here? I think, let's see, yesterday's low of 10,749 should be the first support. And there's a very strong support in this 10,700 to 10,750 zone. I mean, this is the zone in which perhaps you want to try a long trade. If it doesn't work, it doesn't work. The 20 DMA is at 10,700, the 200 DMA is at 10,750. The market will be in this zone. If this zone is defended, perhaps there's going to be a second half rally. And if that is the case, the mid-caps are likely to outperform once again. And there's quite a bit of mid-cap buying, which you have seen. Genuine buying. I think the market really betting on pump priming the economy from here on. So, all your domestic facing stocks should do well. The key is to defend this 10,700 to 750 zone. If that is broken, perhaps, you may see some more profit taking. Having said all of that, the basic premise of this market, having made a hard bottom at 10,330, I think that is still intact. That won't get disturbed by any kind of profit taking today.
No, I take your point about the wherewithal for this rally. There are a couple of things. As you pointed out, there is an expectation of fiscal and monetary largesse.
Yes.
Dr. Pranab Sen has been pointing out repeatedly every time we invited him over the last month that election quarters are always high spending quarters with or without government largesse. It's just that, political parties are spending. You're printing banners, you're deploying trucks. all that is economic activity that's happening. So he has pointed out that in previous GDP analysis, the election quarters always show higher GDP growth than normal. And a third reason is, the Credit Suisse note clearly saying that the investment cycle has picked up.
Yes.
I mean, there's no running away from that.
Exactly. And I'm just going through some internals. I think this huge buying that you've seen in Hero MotoCorp, yesterday also that continued. That's not flash in the pan. And a lot of these stocks have been oversold. I think, for example, the housing stocks, cement stocks. I think I was just looking at some data. If you see towards the end of 2008 and towards the end of 2013, from then till the general election, you saw stocks like, ACC, Ambuja, Ultratech actually outperform. You saw stocks like infrastructure stocks actually outperform in that 4 or 5 month period leading up to the general election. So I think this both, loose fiscal and monetary policy obviously is going to help. But we have another issue to deal with today, the
RBI board meet.
The
RBI board meet, the big thing that will come up, as I always say, 3 big things are going to come up, and that's prompt corrective action, prompt corrective action, prompt corrective action. But it's been spoken to death. And therefore, I think now, what we were expecting was a bit of a loosening, that the board may come with a roadmap of how do you pull banks out of what boxes should they check or something like that. But I just want to point out to the statements that have come from Minister Piyush Goyal, but actually all the ministers spoke at the conclave, and it is only Piyush Goyal who has also tweeted it. This is giving the impression that the government is so forcefully imposing that probably they have to do away with the framework altogether. So that is what the market will start guessing. Whereas a dilution was expected, is this, going to be much more? And just to point out to some factual inaccuracies there, we will, of course, have Ritu join us. But to say that did you discuss it with anybody is unfair, because Ritu broke a story of correspondence between the RBI and the Finance Ministry on that issue. Is it comparable to international norms? Yes. There are many countries which have PCA. In fact, they are a little stricter. If you go below a certain capital, they sell off the bank. But then those are private sector banks. In India, the Banking Act, Banking Companies Act doesn't allow government stake to come down below 51%. So it doesn't. Each country has different set of prompt corrective action because of their backdrop. So factually, many of these questions that are being raised are incorrect. There are prompt corrective actions. It was discussed by the government, and it was anyway an April 2017 rule. I mean, to ask in December 2018, after losing a couple of elections and a general election, it kind of, sets you thinking as to why should the attack come now. It should have come in April 2017. If that. Okay, in any case, the other things that will be discussed will also be capital of the Reserve Bank. We don't know. The last we heard from RBI in the press release after the November 19th board meeting was that the committee will be appointed in consultation of the RBI and with the government. So we don't know when they say RBI whether they mean the board, but the matters still could come up, and maybe we will get the name of the committee members. We don't know. That's another important thing to point out too. And of course, there could be some MSME announcements as well. Just on the matter of capital, again, let's pull up the Piyush Goyal tweets. One of the tweets is that government never wanted RBI's capital. Now, if you are attacking RBI as having over capital, the only person who can take it is the government, because RBI is a subsidiary of the government. It's, as you know, as you run a company as well, the subsidiary's profits are the principal's profits. So to say that government does not want the money is wrong, and anyone can go to court if that money is used elsewhere. It belongs to the Consolidated Fund of India. The argument is that it should directly go to banks. RBI cannot fund banks. It is like saying that because a criminal has stolen something, the policeman is paying the fine. The regulator can't pay the fine for the regulated, pointing out, making an NPA or creating a default. The logic itself doesn't seem very clean. It has to go to Consolidated Fund. Consolidated Fund has to capitalize the banks. That would be the clean way of doing it. So if something else is done, we could get into constitutional challenges. I'm putting that on the table because that could be the next thing to watch out for. If the money is transferred directly from RBI to banks, you can be sure that a lot of constitutional experts will go to court saying that this belongs to the central treasury, to the Consolidated Fund, and Parliament will have a right to vote on it, and that right cannot be taken away. Okay, that's just by way of what may happen. It's not immediately of market interest as much as economic interest, economic policy interest. Okay, those are the issues on the table. Maybe we now come back to equity markets and take a look at some advice that we are getting, what wise experts have to say before we start trading this morning. The first advice is from Chris Wood of CLSA. His usual Friday column says the latest data in India has again highlighted the lack of inflation and again raised the question on whether the Reserve Bank of India has been too tight. He says the RBI commentary last week in response to the recent inflation data was also more dovish than in the past, and this suggests a lack of further monetary tightening. Chris says with the appointment of the new RBI Governor, Shaktikanta Das, following Urjit Patel's resignation on Monday, Indian financial markets have now started to price in renewed easing. Indeed, he adds, with the policy repo rate 4.2% higher than CPI, there is a compelling case for a rate cut. He says equity investors should view the change of leadership at the RBI as pro-growth, which I think they have. Chris adds, it also likely means the use of RBI reserves to recapitalize state-owned banks.
Okay, let's get you some money market views as well then. Bhaskar Panda of HDFC Bank says yesterday the ECB kept rates unchanged and formally ended its stimulus bond buying schemes with cautious optimism and reassurance that cash would be recycled if necessary. He adds the dollar index remained above the 97 mark with Brexit turmoil still boiling. And in the Indian context, swift declaration of a change of guard at RBI has been taken positively, and low CPI reading is a boon at this point in time. With oil remaining benign, Bhaskar says the USD INR might consolidate in a range between 71.65 to 71.95.
But on the bonds, Bhaskar Panda says the 10-year benchmark bond yield had fallen yesterday and will continue to remain down given lower than expected CPI reading and the new incumbent in the RBI. He expects the 10-year benchmark bond yield to trade in a range of 7.38 to 7.42. That was the range yesterday as well.
Okay, over to Sonal then for the world view.
Hi, good morning. Well, for the US markets, it was a mixed close after a very volatile day of trade. The Dow that ended high by 70 points after surging as much as 200 points into the day. Nasdaq and S&P also saw some losses after surging 0.7% in trade. Well, Dow has posted intraday swings of at least 570 points in the last 5 sessions that we saw. And there are also signs that China is ready to reduce tariffs on imported automobiles. So that is something that we are definitely watching out for. What happens in the China-US trade wars. Moving on to the European markets, all of them closed in the red. That is because markets closed lower because European Central Bank ended the quantitative easing purchases, and that they ended after 4 years. Some stocks were in focus because of that, something like a UniCredit. Because of ECB ending bond buying program, it surged higher in trade. Other stock that was in focus was Germany's Metro because they are seeing some tough conditions in the Russian markets. Moving on to the Asian markets, they are seeing some red on the screen today because of red closing on the European markets and the mixed close that we saw on the US markets. And also China is set to release a lot of data today, like November industrial production, fixed asset investments and retail sales. Moving on to SGX Nifty, that will come up on your screen. That is indicating a tepid start to trade today. Back to you.
Okay, thanks a lot for that, Sonal. SGX Nifty indicating a mild 0.4 negative. Well, let's get back to the big story. We were discussing about the prompt corrective action norms. We understand from sources that the Reserve Bank had discussed the prompt corrective norms with the Finance Ministry in April 2017 before the rollout. This story was broken by our correspondent Ritu Singh. So we are just dialing her in again to rewind and replay that story for you. Ritu, what had you reported?
Well, Lata, we first reported this in early November when first the government had, raised this issue that the prompt corrective action regime was changed without their consent. It was a unilateral decision by the RBI. And now, just hours before the RBI board meeting, Piyush Goyal has once again tweeted and brought up this issue that RBI changed the rules halfway through the game. And who really did they consult? But we understand, as we had reported earlier, that at least 3 letters were exchanged between the RBI and Finance Ministry before the actual rollout of the revised prompt corrective action norms. The first letter was written by RBI to the Finance Ministry, to the Department of Financial Services, specifically on the 16th of September, outlining the revisions that they were looking to make. DFS then, in a letter that was dated 3rd March 2017, responded to RBI saying that they broadly agreed with the provisions of the revised prompt corrective action norms, but they did seek clarity on a few points and suggested certain safeguards, which the RBI responded to in a letter in early April, saying that it would be going ahead with the rollout of the revised PCA norms, which was finally, released on the 13th of April 2017. So, it would be fairly inaccurate to say it was a unilateral decision. The government was clearly in the loop, and more importantly, it indicated to the RBI very clearly in so many words that it was in agreement with the revised PCA norms. And this is back in 2017, and we're now at the end of 2018, where more than a year later, this has again been brought up by the union ministers just ahead of the RBI board meeting, making it extremely clear, this will clearly dominate the agenda today.
Oh, yes, it will. Ritu, thanks a lot for that. Of course, we'll keep an eye on that. We also spoke to a lot of experts to get their perspective on the relaxation of PCA norms. Let's listen in.
This discussion is about capital. It's not really about PCA. If banks were properly capitalized, everyone wants them to lend in the market. That's how they will make money. And so it's important that they have the requisite cushion so that their depositors are not at risk. Because one way or the other, if any of these banks fail, which are government owned, the government will have to pay for it. Either it will give them capital or it will have to bail out the depositors. So I don't think there is this particular, some of these issues have just become contentious without real purpose. How much is Dena Bank and Bank of Maharashtra as a market share of banking in India? What, 1.5%, something like that? Really small amounts, and how much are they in credit? Again, very small. So, how much of an impact is Bank of Maharashtra and Dena Bank having on credit growth in the country?
The PCA yardsticks are not incorrect or bad. But let us reconcile to the fact that 2 years of losses at the net level do not mean that they are operating losses also. So they may be having an operating profit. Why the losses are coming? Because of the NPAs and NPAs aging, the provision requirements have become progressively very high. Banks are not expanding their books. They have been directed that they should reduce the risky assets. Therefore, in the SME or for that matter corporate assets, they cannot take up anything other than AAA or AA. And some banks like Dena Bank and I think a couple of banks have been told not to lend at all. So that could be some relaxation, saying that you can lend to, say, maybe retail or small scale industries of a particular size